we'll pull up another chart. So I chart on TradingView as well. NinjaTrade is not always the best charting. I'm not gonna lie to you. I trade off of it. It's cool to look at, but I feel like TradingView has a lot better chart for futures, a lot more tools, techniques, things like that. If you want live stuff, you do have to pay for the pro version. It's not, yeah, exactly, boy. You see that, right? I told you. We're taking bits and pieces. That's an actual whole contract. So anyway, that's why you have a lot of liquidity in the market. You don't have to worry about actually ever having to sell your contract. So let's just look at the ES real quick because I think everyone loves the ES. Actually, you know what? Let's switch it up today. Well, no, everyone wants to see this. I'll go back to the NQ in a second. So when I'm looking at the ES, I'm looking at a daily chart. This is typically not the right ES. Nah, if you're good for you, if you know it's good for you, you should leave the NQ alone until you get more efficient. I ain't gonna lie. So we'll get all this crap off the chart here. This is just me charting all the different stuff that I'm looking at. And so I'm looking at kind of different levels on the dailies. And so what you want to do is just, especially here, you just want to have like a bigger, like greater view of what you're looking at, and where you think the market might go, where you think the market might be headed. This gives you kind of a higher time frame, just anything that you're charting. Higher time frame will give you a better sense of the direction that we're trying to go. And that's the main thing that we're trying to do with futures. Half the time, it's really about where the actual instrument is going. If you can figure out a direction, then you can figure out a trade. So typically I like to go from a daily, sometimes even a weekly, just to see kind of how we've been going, what's our trend for the week, what are things that we're looking for to see what happens. That's always kind of the main thing that you want to look for. With anything you're charting, but mostly even futures as well. So obviously you can see that we're kind of been on a run and we had a few little pullbacks, but nothing significant. Typically, 4 to 5% or so. And so what we're talking about with September is really this region down here, this area here where it doesn't have anything kind of, if you want to look at support, if you want to say resistance, however you want to look at it, but this is kind of what we're looking at from a charting perspective. So we're looking at dailies, and trust me, I'll get back to NinjaTrader. We'll go into futures. Don't worry, it's a method to the madness here. So with the daily, you can really see kind of how we've been going and how we've really just been consolidating and melting up. That's really kind of what the ES has been doing, as opposed to other things, like the NQ and a few other things have just been kind of flying up a little bit. But the main thing you're just trying to look for is just kind of get a general sense of, okay, well, we're on the day here. This is how we've been going. Let's zoom in just to see kind of what we need to be looking at as far as our day is concerned. So let's just zoom in and then see what we have. And so the main thing you're trying to look for when you zoom into these things is you're trying to read the language between candles. That's kind of your main thing that you're trying to do. And so typically, when you see kind of long wicks like this, for one, it's probably a news event, i.e. what we had yesterday. And it's just a conversation that says, okay, well, the buyers thought 42.38 was great. The sellers agreed that 42.13 was better. They tried to get it down here, didn't accomplish their goal, but they're still trying to get it there and they're going to keep trying to go it. So that's always kind of the main things that we're trying to look for. Now, obviously, you can see that the ES is really trying to get back down here again. And that's kind of their main thing that it's trying to do. So then we start kind of like getting ourselves down to a lower time frame. And so we'll go to like a 4 hour, and then it'll start to kind of show kind of a little bit of a sense of where we're trying to go and what we're trying to do. And so that's always kind of like the main thing I'm trying to look for when we're doing these things is, okay, what's our level that we want to look at that we're trying to protect. And typically the easiest way to do that is really to look left. And you'll kind of see why we've kind of stayed here for a little bit. And you'll see why we're trying to keep reaching down in here. So typically what we are looking at, and it won't allow me to do this on full screen, so I will show this real quick. And then we'll get into kind of the nuts and bolts of futures here in a second. What we're looking for here is, this is a gap that we've been trying to get through from a long time ago, essentially from June 4th. We've filled it, but we're trying to get through it, and we constantly keep trying to get through it. And then I will explain what a gap is in a second, because maybe not everyone knows what a gap is. So does anybody need to explain what a gap is? Does that make sense? Should we go over gaps? Yes, no, maybe so. Okay, so the main thing that you want to look for with gaps is, and let me take this off, and then let me switch to this. Okay, so the main thing you want to look for in gaps is, you want to look at, it's a 3-bar setup. So you'll have your bar A, you have your bar B, and you have your bar C. So from that, bar A says the buyers wanted the price here, they brought it up, sellers brought it down, this is where they agreed. Next bar comes in, sellers try to bring it down, buyers bring it up, they settle on price up here. And then the next bar here, all the way up. The issue that happens when you have a bar like this, with this much strength, whether it's bearish or bullish, you are going to skip a lot of orders here. So at a certain point, when you saw kind of that money that was on there, for every tick, there's thousands and thousands of orders that are needed to be placed within this territory. So when this shoots by that quick, typically the buying pressure is so much that it's going to skip a lot of orders. And when that happens, you'll have a little bit of an imbalance of supply and demand, or essentially people's orders getting left behind. But when you have this next bar, so the next bar, their job is to come back down and help try to fulfill some of these orders that this bar did not get. So if this bar does not come back down here to help fill all these orders, you're going to get a gap in price between this bar and this bar. Does that make sense? Yes, no, maybe so. Yeah, so when you have that, you're really getting to a situation where this area here is filled with orders that need to be satisfied. And that is why we keep coming back down here. We keep coming back down here, keep coming back down here, keep coming back down here. And so obviously this is on an hour time frame. So this might hang down here for another hour. And that's just kind of what this thing's gonna do. I mean, the world is kind of filled with fear and greed. So if they do this enough people will sell. But if you kind of know exactly where they're going, you don't really have to worry about it too much. So the main thing that you're looking for, especially when you're breaking down like a big, chart like this, you just want to start zooming in more. Once you're into this 4-hour chart, you can just sneak it down to 60 minutes. And this is just, and all you're doing is really just working your way down to kind of see exactly where, wait, what? How can you explain how this is a 1-hour chart? It's just, so for every bar, it's 60 minutes. So for every closure of a bar here is 60 minutes. The last chart we were on was a 4-hour chart. So for every 4 hours, it will print a new bar. So if you look here, this is a timer. If you see here right on the side, it's counting down how much time is left in this candle. So after 36 minutes, this candle will be finished. They will start making another candle. And so this just represents hours of kind of in this. So that's kind of your main thing that you look for. And so when you're looking at this, obviously live, it's a little bit different. And you'll kind of start breaking it down more. Um, yeah, I mean, the time of the candle is really like, I mean, it's light years ahead of what you really try to do. Um, and then so from there, you're just breaking it down even more. I mean, you can, it's different, but not really. The reason futures are a little bit different is just because it runs 23 hours a day and the stock that you're looking at only runs 8 hours a day. So that's always like the main thing that you want to look for. So the stock chart will look the same as well. It won't, I mean, it'll gap up more and gap down more just because it has time missing from it. So that's always kind of the main thing. I like charting my gaps like daily gaps and I like daily gaps and hour gaps. That's typically kind of what I like to do. I like higher time frame gaps. I don't necessarily love, I think 15-minute gaps and stuff are okay, got it. So um so they ask kind of what how do I like my gaps, or like basically what time frame do I like to draw gaps. So for me, I like higher time frame gaps. I like daily gaps, 60-minute gaps, maybe 4 hour every now and then, but like anything other than that is kind of a speed bump personally. um, it's a, you know, this right here, technically, if you look at this created a 15-minute gap and then it refilled it, you know, the next 5 minutes later, 15 minutes later. So to me, every time a gap is created on a 15-minute chart, it pretty much gets refilled right away. And so you'll see the kind of same thing happening here live, is that in 4 minutes, once this stops above 41.90, which it typically probably will, then you'll just see something kind of start here and maybe start working its way back up. Because clearly we're just not, they don't want this to get past this level. So even though I kind of thought it might get here last night. That's just kind of my two thoughts on it. Yeah, and so gaps are magnets to price. I mean, they just really are. And the main thing that there really are magnets for is because um, there is a imbalance in the price. So, you know, when there's an imbalance, the market's got to come back and try to rebalance everything. If the market had its way, the price would just be a single line and everyone would agree on the price. But, you know, as humans and as anybody, they definitely don't agree on things. And yeah, and so typically, you know, it's different ways you want to view it. The market likes balance. They want to refill all those orders from all the banks and international banks that are in there. They want to shake retailers out. Um, there's a lot of different reasons. So, but for the most part, yes, your lower time frame gaps typically get refilled very soon after they're created, typically the next day or so. Higher time frame will take a little longer. Sometimes it may even be weeks. But anyway, with that said, if you're looking at kind of your overall trend, if you see things like this, um, you know, this screams consolidation. This screams no direction. You know, you get a small pop and that's perfectly fine. If you're trading quick things in options or trading quick things in futures, you're scalping and getting out anyway. So typically this shouldn't be of concern to you. But, you know, if you're in a trade, obviously you want to be concerned about it. But so anyway, that's kind of like the same thing we want to do, is just kind of see, okay, where's the conversation headed and how can we be a part of it? Because if we can be a part of the conversation and we can see where it's headed, then now we have a fighting chance to get the price and the direction right. So those are always kind of the main things that we're trying to look for when we're trying to chart these different things. I don't typically go too much further down 15-minute. You can if you want. We got some people in the audience that trade off the 1 minute. You know, shout out to Vic and Draco, but I just can't do it. It just ain't in me. but yeah, so you can do that as well, and kind of see those moves a little bit quicker. So this here, I can show you an example of it. You'll start to see that the bar is a little bit printing a little different, and it may tell a little different story. So if you saw that big bar that literally just said, oh, it's just red and it's just going to keep going red. But if you see this, then it tells a different story. that says, okay, maybe we're consolidating and maybe we might reverse. You never know. So those are always kind of some of the things that you want to look at. You know, if you want to see a different story, I would say the main thing that comes from this is that you really want to do multi time frame analysis. You can't just do one time frame and think you're going to see the whole story. That's always the main thing that happens, you know. So can you use the gaps as a trading strategy? Absolutely. That's actually involved. That's probably involved in everyone's trading strategy, really. For me, I use gaps as a very good confirmation of where the price is going to go. I also use it as an area where the price may bounce, an area where once it gets in a gap and it closes inside of a gap, 9 times out of 10, it's going to fill the gap too. So it can be used as a strategy like that as well. So that's always kind of the main thing that I look forward to when you're talking about gaps. You know, that's always kind of like what you're looking for. Let's see. Do you include wicks and stuff? Yeah, every now and then. The higher time frame ones, I've started to go body to body on higher time frames. On lower time frames, I'll do like wicks just because they seem to be a little more sensitive on price. But higher time frames, I typically start to go. I typically start to go with just the bodies, like case in point here. Like if you have a daily chart, and I'm looking at a daily chart, and I'm trying to see, okay, well, is there a gap here? Is there anything I, don't see? So technically, this is an old gap here that you'll see. And let's see if we can draw a straight line here. Let's see if we got one here. So if you draw it from the bodies, and everyone doesn't have to do this, trust me. Everyone has a different technique of doing this. And so if you draw from the wicks, it'll probably give you a little bit different story of why this is bouncing right here. I typically like to draw from the bodies to see where it's reaching to. But that's why I don't really get too nervous about the gaps. I mean, if they bust through them, great. But 9 times out of 10, it's very hard to bust through a daily gap. They'll fill it, but busting through it is a different story. So at least on an upward pressure, downward pressure seems to be a little harder when we're bolstered with good news all the time. So that's always kind of a thing. Let's see. Yeah, and you can always, and this is being recorded. So take your time. The main thing that I say from like most videos is just watch them first, then take your notes the second time. And then the third time, apply it to a chart. And I feel like that might help people a little bit when you're asking questions like literally during it. You might not get it right away. So it's kind of like anything in life where it's like a chart, it's like a stock chart. You got to consolidate, digest it, and then you can expand into your direction of learning. So I feel like that might be a better way to kind of do it. But don't be afraid to ask questions after I shade you. So no big deal. So the big thing, so I would say after this, if you're in a chart and say, okay, well, I personally think we could be bearish today if you're looking at a higher time frame. So as you go down to your lower time frame, you'll say, okay, well, if we're bearish today, then where can I get into this bearish trade? It may not happen right away. It may be literally right now as we're speaking. And so you're kind of doing different techniques of saying, okay, well, if you're a levels trader, depending on how you want to do it, if you're a levels trader, you're looking at this equal high that it creates here. You can say, oh, well, that's probably a situation where maybe once they get over it, I'll believe and become a buyer. You can do it that way. Or you can say, well, this is a level here that they reached, and this is kind of a common thing, that once they get below that, I can become a seller. Now, if you're playing bigger areas like this, you got to wait a lot longer to get into a trade. But if you're going to play a little bit intraday, like most of us do trading, then you probably want to get in a little bit closer and kind of see exactly what's going on. And the main thing you're trying to look for is direction. Like that's always kind of the main thing that you're looking for. And you're looking for how the candles are reacting, how are they moving, how are they supposed to like accelerate? And that's a main thing that it comes from. Wait, do you not have any sound? Am I confused? Can everyone hear me or no? Oh, okay. Um, And so the main thing you're trying to look for is just acceleration into these candles. You're looking at your candles, you're looking at your timer. You're just like paying attention to try to see how are these moving. The main thing that helped me with futures, and I got this tip from Dennis. I didn't make this up. He said, look at 10, 15-minute candles or 10, 20-minute candles and pay attention to what the candles are doing for the whole 10 to 15 minutes. Because there's a story that's being displayed every time this candle prints, and it's broken up into movies. And if you can figure out that movie, then you can figure out where price is going and where it's really trying to go or where it's really trying not to go. You can see the acceleration, you can see some consolidation, you can see direction, you can see all of that within a candle. I can't tell you exactly how that's going to work, but I will say for your homework and anybody that's been trading futures, literally look at a candle, read 10 of them in a row, and it will tell you where it's going and kind of where it might go. Is there a benefit of watching this in TradingView versus TOS? No, if you have live data, you just have live data. So no, that's just, I just don't have TOS. So as long as your chart has live data and it gives you up-to-date data, no, totally fine. That's charts are charts at the end of the day. As long as you get the live data, you're good. Don't worry about like everything else for sure. But as you can see here, it just kind of stopped exactly where I kind of thought it would. And then it's just, it's just going up and kind of doing its thing. But it's kind of doing what we thought it might do is the ES might be flat, the NQ might go up, and then the YM would sell off. And well, that's the thing. See, that's the biggest thing that you need to do is it's hard for me to say, well, this candle's going to do this every time. 10 1-minute candles. No, don't let your ADD get above you. I said, you can do 10, I would say he told me to do 10, 15-minute candles. So that's kind of what I traded off, but you can actually see kind of what the price is doing. What do you mean? Well, you're just staring at the candle. So it's counting down from 15 minutes as far as showing an example of the 10 candle read. So it's just showing you, you're literally reading and seeing what it's doing. That's really all it is. You're watching. You're being quiet and watching. You can if you want to. I'll unmute you real quick. See if I can find this real quick. Whatever candle you want to start watching. It's like it's not a hard concept. You literally pick the beginning. You see how this has 7 minutes left? Wait till it goes back to 15 of the new candle and just start watching it. It's just watch it like you watch TV. It's not I wouldn't call it rocket science, but just that's essentially what you're trying to do. I don't know if that went through. Is that letting you unmute? I don't know.
Hey, appreciate it.
Yeah. Hi, Draco.
Hey, y'all, it's Draco. So me and Dennis trade together, so I can explain what we do. So the 10-minute, 15-minute, 20-minute candles, they all work a certain way. So if you're looking at a 5-minute or 1 minute, it moves too quickly, so you can't see the movement of the candle. But if you're watching a 10-minute candle, the first 10 minutes you'll see, or you'll pay attention to it, you'll see that the candle goes in the direction that it's going. So if it's going, if we're buying and it's a green candle, it's going up, the first 5 minutes of that candle, you'll probably see it pushing really hard. But the last 5 minutes, if you pay attention, you're going to see it pull back. So you can pay, it's the same thing on a 20-minute. It does the same thing. If you just sit and watch it and watch how they move. You can ride the candle up, but then you can turn around and sell the candle back down. So you can make money going both ways using one candle if you pay attention to how it works. And if you just watch a couple of them, then you'll get how they work and you'll know when the pullback is about to happen. So you can, get out of the claim if you're in an ES and take your profit, or, if you feel like the market's still going in your direction, you stay in. But every candle does have a play in it. So I hope that helps.
Cool. Yeah, so that's what we're talking about. It's just kind of basically what we're really baking this down to is price action. You hear that word all the time, is price action. You're definitely looking at kind of how the candles are printing. You can do this on your stock chart as well. You can do this on when you're reading a stock. You say, okay, well, how much energy does this candle have left? It's a very hard thing to kind of describe per se, but it's really, like I said, it's really just watching the candles. That's why we're saying watch it as it counts down, watch it as it starts. If you watch 10 candles in a row, make a journal of what did each candle do? At what time period did that candle do it? And so that's why I don't really want to say what it's going to do, because that's the main thing I don't want to spoon feed everyone. I want you to do the actual, like, I want you to actually do the work and sit down and do it. Because if you say, oh, the 5-minute candle, literally every 5 minutes is just going to go up. What if it doesn't that one time? Like, you want to actually sit down, look at the candles and do it. I am a proponent of actually, like, you got to put in the work. I'm not gonna lie to you. Like, you have to put in the work to be good at futures. Like, you can call plays and you can do different things and options, but futures will eat you alive if you don't put in the actual chart work. Like, that's the biggest thing that we want. Like, we want literally, I know, Vic. Yeah, it's an intro class. Like, I'm trying not to go too deep either. I'm literally trying to hold back of like literally what I'm trying to say, but at the end I'll go crazy. But yeah, those are always the main thing you're trying to look for. Like we said before, I mean, this has 3 minutes left. This has pretty good strength. It'll probably pull back. It already pulled back. So it's probably trying to accelerate now in these last 2 or 3 minutes. And then we'll kind of go up and see where we're going from there. But, that's kind of the main thing that we're trying to look for when you're talking about futures, and how you want to read price action. You want to look at different levels that they're going to, and what's our overall theme? What's our seasonality of the week? What's our seasonality of the day? What runs in the summer? These are things that you can always look up and say, okay, well, the ES typically cools off around March and April. Every now and then there's a May and go away, which we kind of sort of had this year. Typically the narrative now, as we're running into summer and the 4th of July weekend, we're going to probably break some all-time highs, and we've already broke them, and we're going to keep going. So that's typically the narrative. We run into the holiday weekend. We typically run into Memorial Day, like you saw. We'll run into July. We'll run into 4th of July. We'll probably have a little pullback, which is normal in the market. Like, you're going to have a little bit of pullback. If everything went up every day, it'd be kind of wild. But you want to kind of make sure that you're like looking at everything from a big time frame. And then you can zoom in and start saying, okay, now I have my thesis of we're probably going to be bullish. How can I get into this trade? And so that's kind of the main thing that I'm working for. And that's what I'm looking at all the time. I know my mind works a little different, but I'm really looking at like big time frames and then zooming in to get a precise entry. And from there, you can kind of, work on kind of how you want to approach your thing. You want to trade futures just like your personality in psychology. Like, Draco will ride a candle 5 different ways up. For me, I like to take a little bit of a longer trade and just kind of wait for my target to get filled. Vic will ride Vic will probably ride a trade, 2 days if they let him, if it keeps paying him, which is fine. And so everyone trades a little bit different. And everyone has a different psychology, like, of how they trade. So I think knowing yourself too will help you in futures as well. and just staying calm, just like anything else. The best part about futures, I will say, um, is there's no theta. Like that might be the best thing I've ever learned when I've started trading futures. There's no theta. Nothing's going to eat away your contract except for you. That's the only person that's eating away the contract is you if you don't know what you're doing. Um, so that's always the nice part. You obviously have your intraday margin. There's also other things. Yeah, I mean, you know, I would say if the question is, okay, is futures more complicated than options? See, it's funny, like maybe my mind works a little differently, but I would say yes and no. I would say options can be more complicated if you make it, because I think when people get lost in the sauce when it comes to options is they say, well, what about the theta? Or what about the delta? What about the gamma? What about if it goes up and then the momentum dies and then the premium and then the contract expires? Well, the biggest thing about options is you need to know direction and you need to know time. So if you give yourself enough time and you get the direction right, you'll get your profit. The biggest thing that happens with options is people try to pay cheaper to get more. And so that's how they get burned. So for me, it's not that big of a deal with options versus futures. When you pay cheaper prices, yeah, it's going to be a lot more bigger risk. Those are always kind of the main thing that happens with options. For futures, the concept is simpler. Yes, you're buying the market or you're selling the market. So either I'm selling it saying from this price, it's going to go down. And I'm going to buy it to go down. Like if I thought the price was going to go down from 42.22, I would put in a sell so I can sell the market. I'll just go up here. So if I was in this trade, I would say, okay, from here, I thought the market was going to sell the market. And then from here, I thought I was going to buy the market. So if I thought down here that the market was going to go up, I would buy the market. So essentially, like if I wanted to get into this trade, I would say, okay, I'm going to buy the market. And so if we're at this point, let's see, what is this? 13 minutes. So it'll probably pull back. So essentially, I'll just kind of leave it here if I think the market's going to go up. So I would say, essentially, I'm going to buy the market because I believe from 41.97, the price is going to keep going up. And so once I get filled, you'll see this come out and say, okay, well, now I'm either going to gain or lose on my, contract. And so me, I don't really care because it's sim. You're just going to get into a trade and kind of go from there. If you feel like it's going against you, you can obviously close it, get out of it, however you want to do it. Closing will always kind of have you lose a tick. You can reverse it as well, which I never do. But if you reversed it, you can literally say, okay, well, I want to close out this trade. Instead of a buyer, I want to become a seller. So those are always kind of little tips that you can do. Lex, stop it. But that's what I said. I think both are the same. It's just a matter of your psychology. I think risk management is a whole different thing. Yes, you can lose more in futures than you put in for a couple of different reasons. It's one, if you trade without a stop loss, or if you hold it through a halt, which is a different thing in futures. So futures will close. Futures will close for give or take an hour and a half a day. That's always kind of like a situation where they'll stop trading, and then from there they'll settle the money, and then they'll reopen the market. From there, in between that period, that is the most important period because you actually have to have more intraday margin. Typically, it's about 11 to 12K, maybe 14K per contract on the ES. Or if it opens up, it can gap down past your stop. So in a situation like this, you can, instead of this coming and hitting your stop, this could come here and then the price could start here after the halt and keep going down. And if it keeps going down past this is null and void. It won't stop the trade unless you get out of it. So those are always kind of some of the things you want to look at. And I suggest everyone to start paper trading. I still paper trade some things. Like this week, I said I wasn't trading for real at all, and I didn't. So I've taken some sim trades in futures, and that's kind of the other part. Those are always kind of the main thing that you want to look for in a futures trade. The amount of money you need to start with, that's always relative. I would say, personally, if you're going to start with 500 to 1,000 or so, I think you should start trading the micros. And so that's a whole nother topic as well. So, and we can get into that. Your micro account, your ES, your NQ, and the YM, or what are technically called mini accounts. So there are mini instruments. So they're full instruments that are called minis. And then your micros are 1/10 of your minis. So meaning at $12.50 a tick on the ES, you can, no, they don't trade any differently. They trade the exact same. It's just 1/10 of they're just 1/10 of that. So, and it's $1.25 a tick on the ES. So for your micro, and it's $50 intraday margin for your micros versus $500 intraday margin for the ES. So you can see how you're risking less. You may not make as much, but you're risking less as well. So that way you have a chance to develop your skill, do a little bit better, try to make sure things are going in the right direction. You don't take big losses before you get your skills up. Because I will say this, if anybody that's been trading futures, your sim fingers are very brave. The live ones aren't as brave. So start small, go slow, and then you'll kind of do better. Just like anything that we're talking about with options, like start small, go slower, and you'll kind of do a little bit better. But yeah, everyone's sim fingers are very brave. They knock on a ton of contracts. They do things kind of unrealistic. And then when their live money gets in, it's a different story because people have a different concept of money, and things like that. But those are, and then if you're gonna do a sim account, just make it for what you want to spend and make it for what you want to put in. Don't put a sim account for 100K. Like put your sim account for $1,000 and see if you can grow it in the micros. That's always like a main thing you want to do. I would always kind of want to do that, and make sure everyone's kind of doing well with that. I wonder why this thing's playing around. It should really go up. That's hilarious. But yeah, that's always the main thing. 8 gigs is fine if you're gonna trade. Yeah, there we go. 8 gigs is fine if you're just gonna trade futures. The main thing that I would say if you're gonna be trading like options and futures and doing other things, 8 gigs might not be enough. But if you're just trading futures, yeah, go for it. Not a big deal at all. And the main thing that I'm looking forward to, and even the technicality of this trade. So if you get up, and this is counting in points. So if you're getting up this, to this candle, at this point, I would put this here, maybe not yet, that's probably early, but if you really want to make your trade risk-free, you just move your stop ahead. For anybody that's been trading, just move your stop ahead, and you just have your intermediate targets. Because I thought at this point we might start rocketing up, but that's just kind of what I had in my head this morning. But that way, at least you're protected, because if this thing swips around on you, at least you won't lose a trade. If you're really nervous, you can at least take some profit off. And then that way you can say, okay, well, I at least got some of my profit off the table and I can go from there. But you got to remember that when we're looking at the candles, this is right around the time it's going to start accelerating again. And so when I say you need to read the candles and know exactly what they're going to do each time, they do the exact same thing every time, just FYI. So those are some of the things that you want to do if you actually get into a trade and kind of hold it, make it risk-free. Like I said, I don't use a ton of indicators. Ninja Trader does a ton of indicators and a ton of like algorithmic trading things. I don't typically do that. But you can do that. Yeah, you can drag everything. Everything's like, as far as your ATM, everything's customizable. Target filled. And so I'll show you that here in a second, because actually I'll leave this here and I'll leave that there. Okay, so if you wanted to change like your ATM to, it's all a part of your ATM. So if you wanted to change where you had, let's say you are a one contract trader, um, you know, or let's say two contracts, let's just say two. That way it would keep it kind of more simpler. If you have two contracts, you want to have things in ticks, kind of how you want to do it. And then you'll have two different targets if you want to drag things. And so then you can develop a stop loss, however you want to do it. It's based on ticks. So whatever you're comfortable with on your risk reward. And then your profit, if it's the same as your stop, then that's a 1-to-1. And then if you want to have a little bit longer target, you can have a 2-to-1. Now, there are other stop strategies. I might have to bring other people on for this, not gonna lie, because I don't use them. But there are profit triggers where if you get like a certain amount up, it'll lock in those ticks for you. There is a trailing stop as well. Like I said, I haven't gotten into those. I'm pretty simple when it comes to NinjaTrader, but there are different techniques and different specialized things that you can do that makes life a little easier. But so if you have this is where you would say, okay, I'm trading two contracts. Once I get my order filled, this is going to go 20 tick stop loss, which is my stop loss here. And then you'll have a profit of 20. Yeah, it's basically an OCO order for futures. And you always want to have it automated to where you have a stop loss because things can get crazy. And so you see there what just happened that we saw live, how the acceleration of the candle changed while we're literally talking. So the main thing you want to look at is kind of how these things accelerate and what we're really trying to do in the day. And that's kind of another way to kind of read this trade. But getting past all that little stuff, does anybody have any questions right now? Because I feel like I've been talking for a while, but I want to actually get over stuff that like y'all want to actually learn. So I can talk at you all day. So the Williams, how do I use the Williams R? So the Williams R is very similar. It's developed by Larry Williams. You can look him up, pretty legendary futures trader. But it's very similar to the RSI, meaning oversold, overbought, but it's a lot quicker. So if you're looking at this chart and lining this up, if this candle here was printing, you can see that it's dropping below kind of a quote unquote buy signal before the green candle even starts. Do you see that? Now, I'm not saying you got to use this every time. What I'm saying is if I think it's going to bounce off of this level, which is this 41, kind of 88, 41.99, because I thought a gap was down there, then essentially at that point, wait, what's Drake saying? Oh, yep. But yeah, and so essentially, like it's telling you, okay, well, it's dropping down this level, so maybe I should start looking, to go up. So those are always kind of some of the things that you want to look for. I'm looking at a few more things, but this is giving me extra confluence that's saying, it's time to roll up, time to get going, the main thing that I'm looking for too is just price action. Like, there's really no reason it sold down here besides to just get everybody out of the market that bought it up this morning. There's really no other reason it did that. There's no news, there's no anything. And so the sooner you can learn that, the sooner it'll kind of help you kind of on your journey. Now, if you want to look at kind of how the fibs are placed, I'll show you a different way. That gets a little too specific for this class. So I was told to keep it basic, and I feel like I probably even went a little more than basic already. I don't want Kiki waking up and getting mad at me. But the main thing that we want to look for, though, when we're looking at price action, and anybody that's been actually trading futures for a while, is you don't want to hesitate to pay yourself. You don't want to turn a winning trade into a loser. So if you're looking at this and you say, okay, well, I traded with 4 contracts, then you know what? It's probably time to pay myself at least 3. And that
Right.
way I can leave 1 that's chilling, and then I can let this run. So the worst case scenario is I've gotten 3 contracts at 4 to 5 points. And now I got a runner that could get to put my potential higher target. And but worst case scenario, I'm not losing any money now. I've gotten 3 targets at this, and then this thing can keep running and kind of do what it needs to do. I would say, just like options, you want to be risk on to risk off as fast as possible. Like you really want to do that. Like I believe in that right away. Yeah, you don't want to move your stop so quick to where you get stopped out, but I will say this, like it's better to be stopped out in some profit than lose because you let something run too long. And if anybody's been trading futures long enough, you'll know that if something gets like, if you get up like this, you should be taking profit. As a matter of fact, you should be taking profit a while ago. But that's like, I kind of just know where this is going now. So it's kind of one of those things where I'm already risk off at this point. Um, exactly. You always want to be taking profit. You always want to be taking stuff off. That's why when you trade with multiple contracts, you want to have multiple targets, but at the same time, if you see a trade and you're like, man, I don't know if this is really going to be going where I really want it to go. Nah, I'm about to take some off the board. Like take it here and pull it there. For me, since it's my last contract, I can play around with this and kind of let it go. Um, and then at that point, if you really want to lock in some stuff, you can put this stop right here. You'll see this thing just kind of accelerate on all gas because Thursday's a reversal day. It's right around the time it should reverse. Um, and so that's kind of like the main thing that you're looking at. Um, but when you're in a trade too, yeah, exactly. Like, and the main thing too, I will say the one thing I had to learn the hard way is with your stop. If you put your stop even, you actually will lose a tick. It's because it's stopping you and making you sell at market price. And so the market's always going to be higher than what your bid is. So you always want to make sure that when you're putting your stop loss, quote unquote, even is 1 tick ahead. So if I get in at 41.9750, then you actually want to be just 1 tick ahead or 2. Because if you put it even, you actually lose money every time. So if you ever do that and you put it even and it stops you out and you're like, why did I just lose money? So now you lost a tick, depending on times the contracts that you're trading, plus the commissions. So those are always kind of the sucky parts. Now the commissions, depending on your broker, they're typically now they'll sell you on 90-cent commissions, but it's typically a lie because there's a few other things that come in as far as your clearinghouse and all these different fees that they kind of tack on. So typically it's about $2.50, maybe $2.30 or so commission per trade in and out. And so you kind of, you pay that per trade. So it's really advantageous of you to not take multiple trades a day. You can if you want to, but you better be profitable. And so that's how sometimes futures can get in there too, is that the commissions are a little higher. They get you coming and going. And then, you kind of let it go. That's kind of like the main thing that happens. But yeah, and it just depends on your profit goal too. Like for me, I let trades run until they stop paying me. Like, what's the point of stopping someone from paying you? You never tell anybody your job to stop you from paying you. So I let futures trades run too. I just keep myself protected. Um, let's see. So then, yeah, and then so we got plenty of time left in this market. I just kind of lock in profit and let it go. I will say this: if once you become live, there are certain time periods. I want to say it might have been 15 minutes before the market closes that you need to be out of your contract if you don't have that initial margin to hold over the halt. They'll give you a warning one time, and then they'll close your trade whether you want to or not. And then when they do close your trade, they'll charge you a $50 or $60 fee for not following the rules. So there is something to be said for that. Once you build your account up to have that margin, it doesn't matter. But you have to kind of do that. It's on the Ninja Traders website. It's different for everyone, but it has like initial margin in there. That's kind of how you'll do it. Shut up, Boyd. Um, so it said, how do I know when the market reverses or if it's a retrace? That's a good question. So, how do I answer this with keeping it basic? I just use the indicator. That's all. No, I'm playing. Um, so what I'm typically looking for is I'm looking for a bounce off of a gap or a level. I'm looking for a thesis of why we went down here too. And I'm also looking for time of day. So right around 9, well, for me, 9:30, it's typically a reversal day on Thursday. So if you look back and kind of backtrack a lot of your things, it's typically when the market flips. People say people are coming back from lunch. People say, whatever. It's kind of not that true. I mean, no one's in New York controlling the futures market. I mean, yeah, people are there, but it's just a worldwide thing. It's really just people in London, the market's closed and the Asian market's closed. And so you start getting less liquidity in the market and other people are starting to come in and start to buy it. So that's why when you get these kind of like quote unquote lunchtime dips, it's just people like going to bed. It's not that not so much people are just running out to lunch and everyone in New York is controlling the market because the futures is a worldwide market. So it's just other markets are closing. And that's why the beginning of the US session is so crazy, is because people in London and Asia and here are all buying and selling at the same time. That's why it's so volatile and they're overlapping. And so once you get into this part of the market, this is typically the second wave. It's typically new people coming in. And if where trend was down yesterday, you guarantee it's going to reverse on Thursday. So, but with that said, it's really still just flat. It might do all this for show, but the market is still flat. That's really what the ES is really doing. We're just getting back to kind of our weekly open, which is not even that high at this point. Stop it. But yeah, so that's how you kind of like will look at kind of the market. That's kind of how you would evaluate it. And then you'll kind of look at this candle and say, does this have enough steam to get up there? 8 minutes left. Maybe, maybe not. Okay, so if we want to look at like yeah, I only trade in points. Yeah, what are ticks? So if you want to look at like a retracement, let's just say I thought maybe the market might be trying to fool people, which I don't really see, but you never know. Then I'd be looking at seeing if this is going to retrace back down. So if my bias was bearish, then I would be looking at this to say, okay, it's going to come back up here, which I doubt. And then it would come back down and retrace back down. But I would have to see some signals that show me that the market is going to come down. Target filled. And so that's why I really wouldn't like say that the market was going to do that. I should have let that run. Dang it. I wasn't even paying attention just now. Sorry about that. But yeah, so when I'm looking at so I would say the signals that for me that says it's going to go back down is we need to see like some aggressive action going back down. Like, so for me, the faster the price runs away, meaning from this bar down to here, I need to see this break a couple levels. And it doesn't necessarily mean support and resistance. It's more so where was the previous price. So if, man, you're going to get me going. You're going to get me yelled at here, but we're going to do it anyway, because this is not going to be an intro class anymore. So if we're looking at kind of like swing highs and then you have swing lows. So a swing high is a 3-bar pattern and a swing low is this bottom pattern here. So it's a 3-bar pattern. So if you're looking at your swing highs and swing lows, then you want to look at your highs and lows of those swing highs and swing lows. So that's your high and low. And here's another swing. So here's your low here. And then here's your high, which matches that. So from here, you can just start looking backwards and see, okay, here's another swing high. And then from this 3-bar pattern here, here's a swing low. And then you'll start, and this is your latest swing high and swing low. And the main thing is that when something breaks a low or breaks a high, doesn't mean you need to get into a trade, it just means you need to watch it. And so I'll just do this real quick, and then I'll have this swing high as well. And those kind of match, and you'll be surprised that things match up because there's very little coincidences in the futures market. And so besides confusing everyone, I'll just go through this real quick. This is basically your swing low. So these are the low that I'm kind of looking at. I'm looking at here to see how far would this break down low. I need this to break this low, but also keep breaking the low. I need to have some momentum down to keep breaking the low to actually give me a signal that it's going to be bearish. Because what this is doing is really not even getting back to the previous low, if that makes sense. So when you're looking left, you need to really see, okay, are we really bearish or are we just coming down here to smack people's stop losses? So from there, now I'm looking at, okay, how high are we going? You know, like how fast are we going now? So at this point, and truth be told, I really don't think we're getting out of this. I think we're just going to stay right here and stay flat. That's just actually truth be told. That's why I let that probably take profit there. But the main thing we're looking for is, okay, well, are we, when you're looking at your lows and highs, are we breaking higher or are we breaking lower? So from here, we had a slight low, but what did we do right away? So if you're reading the candles, what I'm looking for to tell me this is breaking lower is I need this next candle to come down here. Like I need this one to come down here. The fact that this one came back up and broke right above is signaling a reversal to me. And so you can, and that's the thing, you can look at these things different ways. Depending on how you're taught, you can literally look, you can read the candles every different way. This one technically isn't a, it's technically not a mother bar inside bar because the tick's actually lower, if you see that. But if you want to treat it as such, you can look at it that way. Another way to kind of read this is if you wanted to do a really quick scalp, you can see kind of what is called a, well, it's not quite a 2-candle trade, so I'll just leave that alone. I won't get into that. But so, and then essentially all you're doing is reading how are we breaking up or down. That's really the main thing. If you take swing highs and swing lows and see how high we're breaking, then you'll kind of see where we're going. To me, this is signaling, personally, this is signaling either flat or just coming right back down here to hang out. Because until something really breaks through, and we're really not that bullish, we're just kind of, I'm just playing the momentum of coming back up here to chill and hang out. So it's probably not the best example when it comes to like checking reversals, but I just check the time of day. I mean, that's really, on a Thursday, you know, these things are controlled by algorithms. So on Thursday around 9:30 my time, it typically reverses. That's kind of like the main thing that we're looking at. Explaining the significance of a mother bar inside bar. Well, yeah, personally, I don't think there's a ton of significance to it, but for demonstration purposes, we can go over what that really means. So if you're looking at this candle here, this candle here becomes technically a mother bar inside bar, and I'm going to show you why that's not always the case, not always a perfect example of what's going to happen. But so this is a mother bar inside bar because this bar here doesn't trade above or below the range of this bar. Does that make sense? And so from there, the next bar that closes above it typically is supposed to signal the direction. Now, like I said, this isn't 100% because you can see right away. Yeah, that's what I said, Drake. Like it doesn't work all the time. But so, but essentially this next direction is supposed to tell you, hey, once this closes above, this should start going this way. That's what the mother bar, inside bar, is supposed to do. But it's not a play that works all the time. That's why I don't really use it as much. I don't knock people that do, but essentially the way the play is supposed to work out is the mother bar, inside bar, a confirmation to the up. Your next candle is supposed to come basically down to the mother bar and then accelerate up. You see, obviously that didn't happen just now. So it's not something that happens all the time. It is a little bit of a cool trade if you want to like every now and then, but it's definitely not 100% hit rate. That's why I don't use it anymore. It's a cool concept to teach, if you want to do it that way, but I don't typically, do that anymore. That's probably my take on that without getting too deep into why it's probably not the best trade for futures, I'd say. In stocks, it kind of helps, but in futures, no, not so much. And so, but yeah, as you can see here, this kind of stopped here. They're just all really, this is really just kind of flat if you're reading this price action here. It just shows that we got right back to kind of where we need to go. I wouldn't be shocked if it just kind of comes up here and hangs out and then comes right back down. I'm never really shocked by things in futures anymore. But the main thing you're looking for too is like, well, are we, especially when you're looking at like what we're doing, kind of is the situation where is it breaking higher or lower? That's always the main thing you're trying to look for. Is it breaking a level up or is it breaking a level down? Yeah, you can make money on a flat market. Yeah, that's because the flat's just relative to where we opened and where we closed. You can read candles and get money on because it's, futures itself is not so much all about the money per se. I mean, yeah, it's liquidity and yeah, you can do it, but you really need to like pay attention to the price action, because if you don't read that, the money's never going to come anyway. So, I think money clouds most people's judgments when it reads price action anyway. So, becoming at least as emotionless as possible is the goal. It's not easy. I'm not always emotionless, but for the most part, I've kind of trained myself to be somewhat of a cyborg when it comes to this. But you definitely have to check yourself and kind of check yourself at the door and say, okay, well, if I'm okay with losing $500 in this trade, then I take the trade. If I'm not okay with it, I probably shouldn't get in it. You'll know if you spent too much or did something crazy when you click a button and you get nervous right away. Like you'll know yourself. The biggest thing is just knowing yourself in futures. Unless we can keep it real, like there's a big opportunity to pull liquidity out of the market to make money in futures. You can make daily income and replace your job in futures. Like personally, forget about all the charting and all that. Like, let's talk about like what futures is used for. Like, I feel like futures is meant to be, like, I feel like in the grand scheme of things, futures is meant to be liquidity to put into your leaps to eventually exercise your contracts and like keep dividends and big stocks for generational wealth. Like I would say that's my blueprint, is to use futures to fund, leaps / options to leverage that money higher and to use that money that has been leveraged to eventually just buy contracts and exercise the shares so I can get residual money constantly. So that's the way I see the market. Because I think that's why it starts as a basic concept and gets more complicated. I think that's why futures is simple. Like you buy or sell, you read the price action, it goes up or down, because it's used to be a liquidity or money maker. And it also can be used as a hedge too. But that's kind of like how I see the market. Everyone can see the market differently, but that's what the vehicle I use. And I feel like it's a great opportunity, because this is just an intro. Like I can get real, real specific, as some people have heard me speak about futures before, but like I really just want to give people and inspire people and give people a chance to see what's possible. Like, I mean, I just took a trade while we're talking. Like, it's one of those things where if you can really read what's happening and see what's happening, you can take a trade and you can be profitable. You don't necessarily have to leave that trade on that long like I did. I mean, because you got to be like realistic with yourself. Like, I mean, how many people would love an extra $200, $300 a day? And as a matter of fact, you can get that $200, $300 a day in 5 minutes. Like, that's the cool part, Um, and that's what I love about futures is it's not about the big money. I mean, yeah, people can make big money. People can make big money in anywhere, really. I mean, look at what we're doing in the options market with Amazon. You can make big money. For me, I'm all about the consistency. Like I have a certain price target and a certain goal every day that I try to hit. And I'm trying to hit it in 1 or 2 contracts and be done. Like I'm trading for my freedom, not for another job to sit in the computer and watch it. So I trade futures to get another vehicle of what I really want to do in life. Like I don't necessarily, like, you can say, oh, do you trade for a living? Yeah, but I trade so I can have freedom to do other stuff. That's the part that I think most people miss. Is I can't get my time back. And whoever I give my time to is very important to me and very important to do. But I don't necessarily waste my time. I think that's the biggest lie people get told is they have time. I think the time is now, and I think there's a reason why there aren't futures courses, at least not for cheap. There's a reason why this isn't marketed to our certain demographic. Most people don't even know what the hell futures are, but this is a world that literally has been hidden, and that's like always the main thing. It's been hidden from us forever, and I think it's time to like grab hold and get going. Can you access an instrument and time frame? It's kind of a loaded question. What the question would be is, what time can you trade? What time do you have to devote to trading? That's going to be the main thing, because there's always cycles, there's volume for different instruments. So if you still have a 9 to 5 and you want to trade futures, then sometimes late at night is going to probably be your time to trade at the London. So you have your Asian Open, which is typically 6 p.m. Eastern. That reopens the futures market. That runs until there's a little bit of volume. Lately, it's been a lot of movement. I'm not sure why, but lately it's been a lot of movement in the Asian market. And then it flows into the London market, which opens at 3 a.m. Eastern. The volume starts at about 2 a.m. Eastern, so you can get a little bit of stuff going. And that runs into the US market. So it's a train that keeps running, but those are typically the times where you'll get a little more volume. How do you change your contract? Mark, so are you in NinjaTrader, Mark? So he asked the question of how can he change his contract? Because futures contracts are 3 months increments. Yeah, so I'll show you that. So if you go to here, and if you go to instrument list, so you go tools, instrument list, and then you go to futures, you can add, if you don't have it already, you can add, say you want the ES, you just double click on the ES, and it'll pull it up, and it'll pull up the most recent contract. And so once you do that, it should flip over. And also they'll have a notice in here that'll have an auto rollover. But also because technically you can still choose that contract, because technically it hasn't expired. It expires tomorrow. So If you really wanted to, you can still get into that contract, but it's time to just roll over to the next one just because we're on to the next usually. That's kind of how that works. Let's see. Do we have any more questions? Let's see what do we got here. Questions coming. Cam, yeah. So yeah, it's always like the main thing. When I'm looking at like getting into trades, I'm trying to get in not when buyers and sellers are arguing. Like I'm trying to get in before they argue or after they've settled their dispute. It's nothing worse than getting into a trade and you're in the middle of a fight. So I typically, use that with a mindset and try to get in where institutions get in. Because you realize, it was a perfect example today. Institutions started loading QQQ in May, and most people started running to QQQ this week or last week. So that I use that same mindset when I'm trying to get into futures trades. I'm getting in either before the fight and leaving them when they start fighting, or I'm getting in after the fight and kind of doing it that way. So um, that's always kind of the same thing that I'm trying to do. Yeah, you can trade off price action and momentum. Yeah, no. So like I would say, I really just started doing the optimal trade entry like, I don't know, 4 months ago, maybe now, 4 or 5 months ago. So no, I've traded a million different ways. You can do yeah, you can do different, you can trade all kinds of different ways. Yeah, I'll show you how to set up a sample ATM. Yeah. So if you're gonna go here, you can go to custom, and I would just say as no one's gonna really trade 4 contracts all the time. So I would, let's say 2, maybe in the beginning you can say 1. Um, and you're just gonna set up to say order quantity. So this is your amount of contracts. And then if you have 1 target, then you would just have 1 target that'll end the trade and it would sell both of your contracts. If you have if you want 2 targets to where you can take profit early and maybe leave a runner, then you can have where there's 1 contract and 1 contract. It doesn't matter about, I'll say this right now. The ATM for any instrument doesn't matter to me and for NinjaTrader because I move them anyway. So, I did have one for the NQ. I'll show you what mine is, which is kind of hilarious. But this is essentially like my basic 1, contract NQ when I did trade it. So, and that's just to start. Because most of the time, if I'm getting into an NQ trade or something, it just wicks down so heavy that I'm just trying to make sure my stop loss is not in the way. It's not so much that I want that much of a loss. It's that I'm trying to make sure that it's at least not in the way when it comes pick me up and it smacks like my entry. I don't want it to like smack down and hit me right away. Because if you got a 20 tick stop loss on the NQ, you're going to get stopped out more times than not, unless your entry is ridiculously good, which can be, um, that's kind of, yeah. So that's, yeah, it's a 2-to-1 risk reward. Yep. Um, let's see. Can I? Let's see. Oh wait. For some reason this chat's like slow. I should get in with my phone so I can look at it. Yeah, this chat's like slow. I'm gonna get on my phone real quick. So, but yeah, so that's kind of the 2-to-1 risk reward ratio that I'm looking at. I'm gonna log on my phone real quick. Just give me a second. That way I can read the chat a little easier. Oh, Kiki in the chat, but she can't make this, huh? Sad. Recording in progress. Yeah, just give me a second. I'm gonna turn this down. There we go. Sorry about that. All right, I'll be able to see this chat going forward here now because I can't read any of that in here. I did miss this question earlier about London. So there is a London thing that happens. Can everyone hear that, or is it an echo? Just let me know. Okay, cool, perfect. So there is a little bit of a London thing that I'm working on. It's not a trick. It's more along the lines of um, potentially looking at the direction of the market. And so I'll get back to that in a second as far as like the other questions, but I want to get to this one first. So when you're looking at the market, I'm looking at institutional days. So it'll be your midnight to midnight. This is all based on New York session. So you have your midnight, which is midnight Eastern to midnight Eastern. So that's your beginning and ending of your institutional day. So that's kind of how that works. And then from there, you're going to be looking at your high and low in between that institutional day. Does that make sense so far? Dude, what is going on with this chat? I can't. I want to actually answer people's questions, but this thing is going slow. Okay, maybe it finally caught up. Okay. So what I'm looking for is kind of your high and low of the day. And I'm looking for, yeah, so it's midnight to midnight Eastern time. So it's all based on that. And then I will be able to, okay, cool. I got the chat up now. Perfect. My God, that took forever. That's my fault. So I'm going to get rid of this one, and then everything else say after this, I should be able to see. Okay. So from here, what you're looking for is your high and low of each day. And from midnight, so for me, it's 2100 hours. So 2100 hours to 2100 hours, because I'm in Arizona in specific time now. So, and then your high and low of the day. So what I'm looking for is, and you'll have kind of almost all three sessions built into here. So you'll have your London session, and then you'll have your New York session, which is right here. You have your Asian session going into your London here. And then you have the New York session, and then you'll go through the New York session and end, and then we'll start back with the Asian session. So within that time period, and Friday is shorter, yes. So this is Friday right here. So, but what you're looking for is you're looking for whether during the London session, whether it breaks a high up here or a previous low. That's the main thing you're looking for. And and I won't get into too far into this, but like essentially the thesis goes that if London breaks a high or a low right away, the rest of the day reverses. That's kind of the theory that happens right now. And that's kind of what you're looking for. It's holding true for the most part. I don't think it's not 100% accurate, but I would say the theme of the day typically reverses. You know, the theme of the day typically kind of reverses, but yeah, it's not a screen indicator at all. I draw them all. I'm old school. I chart everything. Like I don't chart it. I don't yeah, I don't really like using any indicators. Like I don't like any of the colors and stuff. I don't know. I just don't like any of it. I like kind of my chart being clean. Dang, what is the ES doing? Did I miss this? Oh yeah, it's still doing. Okay. I was about to say, like, do you do something different? But yeah, as you can see here too, like literally today. I mean, if anybody's ever seen a stop loss, I mean, that's literally a stop loss hunter, if you ever kind of thought that. Those are kind of a perfect example of what a stop loss hunter is. So if you ever want to know what that is. It doesn't look like it on this chart, but if you look at an hourly, you'll see kind of what's going on here. That this literally came down to try to smack everybody. And you should see the ES kind of rise up here. That's I kind of had 42.28 as a target for the day. So maybe we'll get there, maybe we won't. That's kind of where I thought we'd get right here. So it's interesting that we didn't come get this low though. So that'll be interesting. So we could potentially go up here now. Which one of the sections of cheat code? Um, oh, is Lex just kind of made indicators for having different zones where you can. It basically just helps with your zones. The New York zone, London zone, Asian zone kind of helps with that. Yeah. So my thought process when it comes to yesterday, drawing the fibs like from a higher time frame. So the reason we do that is for me is because of this. So like we've been going so long um, that this never got taken care of. So if we're, we talked about drawing our gaps and we talked about the market liking balance. We talked about how we want kind of supply and demand zones met. If you have, whatever you want to believe in and whatever works for you, either way you slice it, the market is trying to get back to balance. That's really the main key that you want to remember here. And when it does gap up like this, it's going to come back eventually. So what I did was use that thought process to get us where we kind of needed to go. And so what I was thinking and what I kind of figured out is there's two different gaps here. And so unfortunately, this is 2 different days. So it may not make sense. So I may erase the other one right quick in a second. Actually, you know what? I'll erase this. Sorry. Let me erase this real quick. And I'll bring this to, let's do a 4-hour. So I'm always kind of, when I think news is coming, and we've kind of gapped up and been in certain regions, like I want to look at it from a higher time frame. So I'll zoom in so it doesn't freak everyone out here in a second. So I'm looking from like higher time frames because I know, just like you guys know, when news candles come, they're coming very aggressively, and they're coming down to kind of hit everybody. And so what I look for is when we first start gapping up like this area is going to come back and get touched eventually. So it's just a matter of when. So if we're hanging out like this and we're doing this, what's the only thing that'll drop the market that quick? It's news. Like, and what I mean by that, and that's why it wasn't really like a cryptic tweet when I put the news only gets the price back to where I'm looking anyway, is because I'm already looking to know that this is coming down here. And I typically know where it's going to stop because it's really just trying to satisfy orders. It can scare people, I guess, but that's only if you don't know where it's really trying to get to. And so from there, I knew it was trying to get down to this higher time frame gap. That's really the main thing that's trying to happen here. And so if you draw it from body to body, like I started doing with higher time frames, there's really no coincidences in this market of where it actually went and why it stopped exactly there. So once you figure that part out, trading becomes somewhat easier, because now you don't necessarily have to live for day to day. If I wanted to wait on this, I could just wait all week, trade one time a week and make what I wanted to make. Like that's like how kind of crazy life can get. But essentially, like that's my thought process with that. So I'm saying, okay, well, if we're gonna go up that high, and never come back here, we're clearly gonna come back here eventually. So at this point, now I'm just waiting to see exactly how far we're gonna come. And so once we started our gap up here, this is where I kind of thought we might come down to. And so I'm like, okay, first time we gapped up, it doesn't really matter if it's red because it really gapped up here. And this is actually where I wanted it right there. So this is our first little gap up. and it's over just a long time frame. If anybody like trades, even some of the optical trading entry, it's just a bigger OTE entry. You're just doing it over a higher time frame, you know? So that's all this really is. And when this candle came down here, I waited kind of right at the 70, and then, you know, and then it just kind of went back up. So it's all within the same time frame. It's this is the same candle that happened. So, and this was the end of the day. But yeah, so just that was my thought process, that I thought we would retrace back down there to fill all this in. And so once it filled all of it in, right down to a T, and that's why last night this went down here. Now today, that's a whole nother issue. It's just grabbing more orders. But that's how I view the market. Everyone can view it differently. But to me, it's all about getting the market back to balance. And that's what all these like long wicks are. These long wicks are trying to gather all these orders to head back up. Because when you do this, you see this long wick here, it's trying to make sure that all these orders are taken care of. And so that's why this one retraces back down this long wick again. It's trying to grab all these orders and go where it needs to go. So that's why when you see this jump down, this comes right back up to grab all the orders again. Now, this could very well just come back down here and shoot back down here, and then we're basically just stuck in consolidation. But yeah, that's always kind of the main thing that I'm looking at. But that was my thought process of how that worked. I hope that makes sense, and I hope that helped a little. But that was kind of my thought process. You know, when you're trading futures, like they always say, never trade news. I don't necessarily agree with that. I will say if you're in a trade, you probably need to get out of it. I'll agree with that. I'll totally agree with that. If you're in a trade, you need to get out of it. If you're in a trade and you know news is coming. If you're waiting on a trade and news hits and you kind of know where it's gonna go, nah, I don't believe that. You can miss me with that. I'll go into a trade after news hits. I could care less. That's actually where all the money's made. We want volatility in the market. Like, don't let anybody fool you that volatility is bad. Like, your option contracts don't move without volatility. So that's, you know, that's what you're looking for. You want volatility. You want volatility in the futures market too. So you just don't want to be in the trade when it's happening. That's, you know, that's probably the biggest thing. I don't know if I want it to be in it when it happens, but I'll catch the wave though. I'll catch the wave right up. That's kind of the way I view it. But you see why this is like, and this is technically a higher time frame gap. So this is a 4-hour gap. And you see how it's like really struggling to get out of this? It's just hanging out down here, gathering everything it can. And now that we exploded out of it, you know, we probably got a very good chance to kind of get up here by the end of the day. Actually, maybe tomorrow. I'm going to say tomorrow. That's a lot for today. I'd say tomorrow. And I think what will happen is we'll probably come up here and then we'll come down here and bounce and then head up here for Friday. So Friday could be crazy, could be special, could be fun, but that's kind of the way I see it. I'll probably have to wrap this up now because I got to head out a little bit, but I hope this helped. It's coming kind of straight off the dome. I don't really plan anything per se. We're just going to start. We just talk futures and we can talk it all day, but that's kind of what I do. Yeah, if you have any questions or anything, just hit me up. But we just kind of, you know, we out here trying to pull money from the market any way we can. We want to turn everyone into ATMs. And I would say the next time someone asks you how much money you can make in the market, you should respond with how much, basically, you should respond with however much I want. That should be the response that you say. If anybody asks how much money you can make in the market, say how much, it's whatever the amount I want today. That's the one you should do. And when you get to that level and get your mindset to that level, I think you can elevate and you can kind of, you know, do it. And I think you shouldn't let anyone tell you that this market isn't for you. You shouldn't let anyone tell you that that you should go, you know, now if you love your job, great, but you shouldn't go into a job like, you know, basically trading your time for your soul. Like I will never do that again. So that's just me. But um, I will let you guys go, and you can go in peace and abundance. And let's see if it gets to 4228, and we'll talk later. Hope you guys enjoyed it, and I'll see you on the flip side.